For a company which went public less than about a year ago at sub 1,000 rupees, now reports are coming, and now the Morgan Stanley report, which talks about Kaynes technology in terms of the new initiative, I think is something which we need to really focus on. So let me now bring on board Jairam Sampath, whole-time director, and CFO Ramesh Kannan, managing director and promoter. Gentlemen, good morning. Thank you for joining us. Whom should I address the first question to?
You choose.
It is your choice.
Are you happy? Are you surprised at what's happening to your stock? You went public less than a year ago, and now it's 2,500. When it went public, it was an issue which everybody talked about. But 6 months after listing, I mean, the stock has just hit a home run.
Yeah, so the character of the company has not changed prior to listing to today. It is just that this company has taken a bit of time to, let's say, come to the forefront, aided majorly by the market tailwinds. We were preparing. It was like we did a lot of heavy lifting in the beginning. So it is not really surprising that what is happening now. Of course, the pace is a little bit scorching. So you want to add something?
Yeah, I'm happy that the stocks have done well. Investors are happy. I have been always telling my team to perform better so that whoever has had trust on us will continue to have trust.
You're reaching that mark where now you are expanding much more than what you initially thought, let's say 3 years ago, because look at your fundraising plan, 1,400 crore. I understand that the landscape has changed, you are doing new tie-ups, the fabrication business is growing, but you're expanding at a pace like never before, and that also comes with the risk.
Yeah, so essentially the climate for investment is best because there are very favorable tailwinds, not in the marketplace alone, but in the government policies too. And we probably will never had it so good where all the three forces triangulated. One was the market condition, second is the government policy, and the third, of course, is the investor confidence in our sector, which is kind of a newly minted sector, if you will. So the risk is essentially right now much, much lower. And the risk of not, I would rather say risk of not doing it is much, much higher because this is a futuristic thing. Individually, all the two businesses, which is semiconductor assembly and PCB fabrication, are by themselves good businesses. And when we add this to our existing EDMS business or electronic design and manufacturing services business, this triple play is going to help the company in the future. And we are taking this time, next 5 to 10 years, to kind of prepare ourselves so that we can then, when we do reach the global scale, we will not be found wanting in terms of competencies in these kind of critical areas. Because this is we are working in an area which is highly, let's say, techie area. Every day there are newer things that are happening and so on, and we have to also grow. So all these put together, I think the risk is more if we didn't do it. So that's why we said we will do it, and it's quite affordable because of almost huge amount of subsidies that are available right now for the early players.
What happens
Added
now?
to what Jairam Sampath has been telling, as a company, we have mitigated all these risks internally by putting in strong systems in place. And I'm very sure and certain for this growth, we have put our system full in action.
Ramesh, PLI schemes are structured is that you have a deadline to meet. You achieve this milestone, you will get advantage of PLI schemes. How far are you away from that that milestone which you need to achieve so that you would be benefiting from PLI 1?
Yeah, so this has got two components. You rightly point out there is a PLI component which we are still awaiting approval, and the primary component is as part of the India Semiconductor Mission's subsidies for initial capex itself. And that is a significant amount of subsidy. As per the government policy, it says up to 50% of subsidies available from central government, and state governments vary between 20 to 25%. The first phase, or whatever we call the Telangana phase, we have already got the state government's approval. We have also been allotted land, and we have, of course, applied to the Indian Semiconductor Mission, and anytime that should come through. And of course, PLI is an added benefit to this. So there are multiple let's say, schemes working. One at the central level, there are a dual prong. One is PLI, the other is capex subsidy, and at state level there is a capex subsidy. Plus, they also subsidize land, and they give you a lot of encouragement in terms of giving you very good positioning for the land, etc., which is near ports and all that. So it's almost as if the entire environment is egging us on and saying that please go and do this now, and otherwise later on don't crib that we don't have a conducive environment.
Mr. Ramesh, if I can get also you in the conversation, this entire semiconductor backward integration that you're doing, what exactly can it mean in terms of numbers? If you can lay out a few more details for us in terms of what's the capex investment, what kind of revenue contribution are you expecting, what could be the product mix going forward, given, of course, this foray into multiple segments?
Sure. So, as we had earlier announced briefly in an MOU with the earlier governments, etc., the total outlay, 2 phases included, is about 3,750 crores. At this point in time, we have sought a board approval and obtained it. And of course, we are at appropriate time, we will go to the shareholders also and get that approved. So we will initially raise about 1,400 crores, which will be sufficient to fulfill all the investment requirements from our side. And of course, the remaining comes in the form of subsidies from the state government and central government. So, this, let's say, broad timelines, let's say starting is this quarter, that is Q3. And by the Q2 of next year, let's say end of September of next year, we probably would have been completed the pilot lots and so on. And the next 1 year thereafter will be used for increasing the capacities and all that. So roughly 2 years of gestation will be there. In terms of numbers, etc., these are all categories which are asset intensive. So you can expect anywhere between 1 to 1.5 times the asset turnover. But that job is made much easier because we get almost close to 70 to 75% of subsidy on the capex from the governments. So that's why effectively it is not very different from our existing business, wherein we do about 6 to 7 tons on the assets. The added advantage here is that once we get through the initial starting points, post that we can access advanced packaging and some of those high density interconnection PCBs, etc., which are obviously much more value accruing, and they really place us at the top league table worldwide. There aren't many companies who have done this, and like I said earlier, the risk is in not doing it. Currently, all the conditions are favorable. So we said that it takes a little bit of stress for Ramesh ji here. He has to do a lot of work, and of course I support him. So other than that, I think it's good to attempt this now.
And Jairam, request you to stay with us. We want to talk a lot more about your fundraise plans, your product mix, your margin outlook, etc. Quick break. We'll be right back in 10 seconds.
So glad you like the apartment. And this is our swimming pool.
पर इतने प्रेशर में कैसे जिएंगे?
Housing.com, जहाँ है मैक्सिमम प्रॉपर्टीज. Housing.com, पर से perfect. Download now.
Welcome back. We're in conversation with Jairam Sampath as well as Ramesh Kannan of Kaynes Technologies. So, Mr. Kannan, I wanted to talk to you about the fundraise. The board had approved a 1,400 crore rupee fundraise plan. What is the timeline for this? And can you tell us the route and what the utilization will be?
Our board has approved our fundraise plan of 1,400 crores. We are planning to take it on
as appropriately based on our approval from the shareholders.
Approval from the shareholders, because our EGM is yet to happen. But we are in the market now looking for a QIP, and that is how we are planning to raise. This money we will be deploying in the next 8 to 12 months.
Okay.
And this will be purely focused on our semicon assembly project, as well as that is called OSAT project, as well as the bare PCB project. Finally, obviously, we are a few days away from completing our 1 year, and post that board has authorized us to ask for a EGM, and in that we will consider all the options and we'll certainly come back to you. So obviously it is 1 or 2 months away from today in terms of final fundraise.
Sure, point taken. But in terms of this 1400 crores, which will happen over the next 2 to 3 months, are you getting a lot of interest from investors, and that's why perhaps you'll look at preferential issue, or you'll go towards rights issue and give the participation opportunity to the rest of your investors as well?
We
To be taken.
We have not yet taken a decision how
No
to
worries.
do it, but we are on a roadshow with our investors,
Yeah.
and we will take a call at the appropriate time.
Yeah. See, fundamentally, we need to do it ASAP. We every month you lose on this puts us back a tad as far as the development of technology and all that is concerned. So we will do the shortest possible way to get this money into the company, and then of course implement into the projects.
Sure. And just
All
before I let
options are
you...
open to us.
No, I take your point. Just before I let you go, quickly wanted to come back to the point in terms of how the margin performance will scale up, because as you said, your product mix is changing. What would it do to your margins going forward? What kind of upside should we envisage?
Okay, firstly, this is a value accretive business. That means you will not have a downside to the margin. How much upside depends on how fast we get on to the higher end products, advanced packaging, as well as higher end PCBs. They are called HDI PCBs. So maybe for 1 or 2 years when we are developing, of course, the balance sheet will look a tad heavy on investments. But post third year onwards, you will probably have whatever numbers that we are talking about. We are currently the EMS business, the EDMS business is doing about 15% kind of EBITDA and 10% kind of 9 to 10% kind of PAT. So this would be probably better than that. How much better? Time will tell.
I appreciate your time,
We
gentlemen.
need a gestation period of around 2 years for getting these 2 projects on streamline.
Thank you for taking time out, gentlemen. Appreciate your time, and thanks for all the clarity on how business is shaping up, as well as what the long-term growth plan is for Kaynes Technology. That's the stock price at 24.50. Quick break.